Yes, family, what's going on, guys? Let's get it. We're gonna get started in about 3 minutes and 40 seconds. Family, we are about to be live with another phenomenal session for tonight, another phenomenal stream, and I'm excited because we're gonna go over here and look at the markets. We're gonna take a look at the markets, take a look at the charts. It's been a very interesting day overall, right? With the release of CPI data, which we've been talking about pretty much this entire week. So we're gonna talk about that. We're also going to talk a little bit about prop firms tonight as well, pros and cons to prop firms, and I'm going to also introduce you guys to the two most popular prop firms that are actually out there right now. But family, if you guys can hear me, if you guys can see the countdown, let me know by dropping your location in the chat. Drop those locations, family, because we're about to be started in just under 3 minutes. So drop those locations, let's get it, get energized, get ready for another session, because I'm excited to do this for y'all. And we're gonna get started, guys, in just about 2 minutes and 45 seconds. Let's get it. Oh yeah, one last thing as well, make sure to send this link out to everybody that you guys know that is interested in more Forex sauce, that wants more information on how to really become profitable trading, because that's exactly what I'm gonna provide tonight. So send this link out. Let's go ahead and pack this call tonight, family. It's free sauce. You can't compete with free. All you gotta do is just plug in. Alright, so we're gonna get started in about 2 minutes. We'll get this thing started. Drop those locations in the chat for your boy. Let's get it. Alright, family, what is going on? Welcome to tonight's call. Super excited to be here with every single one of you guys. Let's see who we got in the building today. I see we got Houston, Texas on the check-in. What's going on, Houston? I see you guys in the building. What else we got? We got the Wizard Gang. Check it in. Shout out to you out there in the Wizard Gang. I appreciate you. Houston, Texas, Trinidad and Tobago coming in deep. We got Texas in the house. We got ATL in the building. Orlando, Florida. What is going on? We got Wally in the house. What's going on, Wally? Good to see you in the chat. We got New York in the building heavy. We got New York. What up? We got ATL in the house. Sacktown, California in the building, present and accounted for. What's going on, brother Joseph? How are you doing? Good to see you in the chats. Let's see what else we got here. So many people watching, only 8 likes. Yeah, definitely go ahead and like this video, family. I do want this stream to be blasted everywhere, right? I want the whole YouTube community to know that we are doing these sessions every Tuesday, Wednesday, and Thursday until further notice, family. So if we want to really help me get these numbers up, all you gotta do is simply like the video. Also, you know, just engaging in all in general definitely helps out, guys. So go ahead and like this video, please, please, please. I'm begging you guys to go ahead and smash the like button for your boy. But let's see who else we got in the building. We got Vermont in the house. What is going on, Vermont? I see you in the building. What's going on, Kyle? We got Detroit in the building. We got East Texas. How are you doing, Michelle? We got the boy Skaggs in the building. What is going on? Shout out to you. We got my guy Jero checking in. I appreciate you, Jero, for being there. We got Birmingham, Alabama in the building. Dallas, Texas. I see you, Jabari. What's up? What's up? What's up? So once again, guys, welcome to tonight's session. Like I said, we are going to be doing these sessions, you know, every Tuesday, Wednesday, and Thursday at this exact same time until further notice. Okay, because I want to be able to really just provide the YouTube community with as much value as possible, right? I want to really help you guys become the best trader that you can ultimately become. And there is going to be a lot of value, a lot of information that I give on these streams, okay? A lot of information. So if you do not have a notepad, if you do not have a notebook ready so that you can just start to write down certain things that stand out to you, then you're already behind the ball, guys. If you have your notepad ready, if you have a pen and paper ready, if you have your notes on your phone ready, let me know by dropping a 7 in the chat right now. Why? Because note takers are the money makers. All right, and it's not just the note takers neither, right? It's the note takers and the appliers are the money makers. All right, so not only don't you just take notes, but also make sure to apply all these notes that you guys are taking. Okay, I know for a fact I'm not the only YouTube video that you guys watch. So no matter where you get value from, make sure that you're not just taking value just to get it, but make sure that you guys are also applying the value that you guys are learning. Okay, it's the application of information that leads to greater destinations. I just made that up right now, and that is a bar. That is a bar, right? Let me say that one more time. Okay, it is the application of information that will lead you to a greater destination. Damn, that's a bar. I need to write this shit down. Hold on, give me 1 second, guys. See, I just be flowing, man. I just be coming up with bars on the top of the head. All right, let me see. I'm actually going to write in my notes myself because that is a gem. All right, say it with me. It is the application of information that will lead you to a greater destination, guys. And I'm dead serious. Let me write that down before I forget it, because that is a bar. That is a bar, and that is so true, guys. Okay, it is the information, or it is the application of information that will lead you to a greater destination. If y'all didn't know, family, I'm a rapper. I rap, baby. I'm lying. All right, I'm lying. But I definitely know how to make some things rhyme. Okay, so that is a bar. I definitely just threw it in my Telegram as well, so that I have it in there saved for me to actually go ahead and use that bar later on. Okay, so like I said, welcome to every single one of y'all. I appreciate y'all for being here with me tonight. I see we got St. Vincent in the building as well. We got RDU in the house. What's going on? Shout out to you out there in RDU. We got T. Hefner in the building. What's going on, T? I see you in the building. Detroit, stand up. What's up? I see you guys out there as well. Let's see, you and Gustavo. Yeah, big shout out to my brother Gustavo. That's family right there. Let's see, Forex freestyle. Yup. It is the application of information that will lead you. That is such a bar, family. That is a bar, right? But let's go ahead and get into what we want to talk about today, because I got a few things we're going to talk about, right? We're just going to go over news that was just released today, right? It's something that we've been talking about this entire week, was CPI data, which actually did get released today, which was actually very, very interesting. But we're also going to talk about a few setups that I'm going to be looking at going into tonight. And then we're also going to talk about prop firms. How many of you guys right now know what a prop firm is? If you know what a prop firm is, okay, drop a 7 in the chat. If you don't know what a prop firm is, drop a 3 in the chat. If you know what a prop firm is, drop a 7. If you don't, drop a 3, because that's what we're going to go over today. All right, we're going to go over a few pros, a few cons. I'm also going to give you guys tips on how to actually pass a prop firm if that's your goal, if you want to leverage that aspect on what you, or how you really need to look at it and how you need to approach it. Because if I'm being honest, guys, like, passing the challenges for the prop firms is not just an easy thing to do, right? It really isn't. Okay, in fact, a big portion of people are not able to actually accomplish the challenges, right, and pass both phases of the actual challenge to even get to the live account. All right, so we're going to give you guys a few tips, a few tricks that you guys can start to leverage and implement so that you guys are putting yourself in the best position possible to absolutely go ahead and pass the prop firms, right? So I see we got a few sevens, we got a bunch of threes in the chat. So it seems like it's a mixed crowd, right? It seems like it's a mixed crowd of people that know what they are and know what they don't are. All right, so we're definitely going to talk about that today. I see we got Homestead, Florida in the building. What is going on? Shout out to you, Evangelica. How are you doing? We got Trinidad in the building. Shout out to you guys out there in Trinidad. I appreciate y'all. Let's see who else we got here. We got the Bahamas in the spot. What's going on, Leon? How are you doing? Right, so let's go ahead and take a look at the news, guys. So again, we did have news that came out this morning with CPI and core CPI getting released. Now, for those of you guys that don't know what this is, and if you guys are ever interested in figuring out what any news event really is, you can literally go to pretty much most of these calendars, guys, have a detailed section that will literally break down exactly what these news releases are and why us traders really need to be paying attention to them. All right, so CPI and core CPI, it measures the change in the price of goods and services purchased by consumers. Okay, it pretty much measures inflation and how inflation is doing, at least for this one, from a month-to-month standpoint. Okay, so this news release, this data that actually was just released today, if you look at the numbers, they were forecasting it to actually go to 0.2%, which is lower, much lower than what it was previously at, but the actuals came out at 0.3%. All right, so the actuals came out a little bit higher than what they expected, but it was still far less from the previous data. Okay, now core CPI previously was at 0.3%. They were forecasting it to come out at 0.4, and it actually doubled what it previously was, right? So core CPI came out much higher than was expected. But overall, guys, the way that I'm interpreting this, right, is that inflation is still here, right? Inflation is still here. It does seem, at least from CPI standpoint, that it might be finding some type of a plateau where we might start to see it turn around and we might start to see inflationary numbers go to the downside. But based off this data right here, this pretty much, in my opinion, solidified another rate hike of around 50 basis points, right? Or 0.5% interest, right? So for the next federal funds rate, when I don't even know exactly what the exact date of it is, but for the next Fed fund rates decision, I believe that they are going to raise rates from 1% to 1.5%. Okay, so a 50 basis point hike in interest based off this right here. Now, if this would have came out at forecast or even lower than forecasted, they still most likely would have raised rates, but then they probably would have, went down to around 0.25% for an interest rate hike. But I believe, because of this data, it's pretty much setting up for another 0.5% interest rate hike. So that's going to be very interesting for us to pay attention to. And it's also something that we really have to start pretty much pricing into the markets now. Okay, because now that the data has been released, we want to start trading on what the potential rumors are going to be for the next federal funds rate. Now, I don't know exactly what the date is of the next. Let me see if I can actually find it real quick. All right, let me see if I can find what the actual, if any of you guys know, right? If any of you guys know what day the next rate hike or the next rate decision is, please let me know in the chats. Right, because I really do not know. Right, let's see. Federal fund rate dates. Let's see what we got here. And if my computer seems like it's acting slow, it's because it does act slow. Anytime I throw on this OBS, which is the streaming software, it just goes extremely slow. All right, so let's see. What is the next federal funds rate? Let's see. I want to figure out when the next one is. Let's see, meeting calendars and information. Let's see what we got here. Let me also see what we got in the chat. I'm in the middle of a 10K challenge. Got like 2 weeks left to pass. Let's go. You can do that. You can do that. Just follow your rules. Follow your rules. Just follow your rules and you'll be fine. All right, we got Alex Zeno in the building. What's going on, Alex? Good to see you. We got Raleigh in the house. What's up? We got Chicago in the building with Chino. I see you. What's going on, Josh? Good to see you in the chats. We still high AF with inflation and market tanked again. Yes, it did. And we're definitely going to get into all that, right? 100% we're going to get into all that. So let's see when the next meeting actually is, right? So we had the most recent one was May 3rd. So the next one is going to be in June. Right, which is pretty much next month, right? So next month we have the next one, June 14th and the 15th. Now again, so for next month, based off the data that I'm interpreting, that I'm seeing with CPI, I believe next month they are going to raise rates once again. So now that we have this data and we have this potential rumor, which is what I'm creating right now, this is my bias, my opinion, right? But opinion is also known as a rumor. We have to start positioning ourselves now. Okay? We have to start taking advantage of opportunities now. Not when it gets close to the actual date of the release, which is what most people typically do. You want to trade the rumors, not the facts. Write that in the chat, family, right? Or write that down in your notes. You want to trade the rumors, not the facts of when they actually come out. Because by the time it actually comes out, all the big money is already positioned. All the big money's already made some moves, and it's already typically priced into the markets. So you want to trade the rumors, not the facts. This is very, very important. Very, very important. Right? It should be August. There's another one in August, but the next one is next month, right? So, and we're talking about the FOMC federal funds rate. So we have June, July, September, November, and then December. Right, those are the actual meeting calendars for FOMC, which is ultimately going to decide what interest rates end up being. Right, FOMC, guys, which is what? It's the Federal Open Market Committee. That's the committee that really dictates interest rates. Okay, I'm not sure exactly how many people are in this damn committee, but they got a lot of freaking power, right? Because they're the ones that are really analyzing the markets from every perspective, and they're trying to do things that makes most sense to try to keep our market from going into a crazy recession, but also trying to figure out how to control inflation. You gotta understand, they have a very hard job to do. Like, they really do. Jerome Powell, right, who's the chairman of the Federal, like, they have a very, very hard job to do, especially with the state of this economy that we're in right now, where our economy, for the most part, besides the past month, we had an absolutely on fire economy. Like, everything was booming. But because it was so on fire, it was causing everything as well to go up in price. The price of everything was increasing. And that's what is called inflation, right? When the price of goods starts to go way crazy, the way that it was, to where now it's around 8%, that's not healthy, okay? The Federal Reserve, or this committee, what's healthy for them is 2% growth year over year. They typically want CPI data to be around 2%. Right now, we're literally 4 times that. Now, why is that not good? Because that's going to really hurt middle class and lower income families. People that are living paycheck to paycheck. Okay, because as inflation's going up, as the price of goods is going up, what is staying the same? Answer this in the chat. Right, what is staying the same? Rumor Junkies checking. Yeah, for sure. I actually got that from my guy Skaggs. He's the one that really told me that a while ago, right? Skaggs used to say that all the time. Right? You want to trade the rumor, not the facts. Right? But really think about this, guys, right? Why is that not a good thing, right? If the price of goods is going up, but yet something is not changing, that's why it's not good. There we go, Kyle. Yeah. Right? So the price of goods is constantly going higher, but yet wages are staying the same. How much people are making for an hourly perspective, how much people's salary is, that's not changing fast enough compared to how inflation is. So that's why it's going to make it so hard for a lot of people to really survive in an economy that's growing at an 8% clip year over year. That's why the Federal Reserve is acting the way that they're acting. That's why they're trying to be more aggressive now, because they have to try to get that under control. If not, then we're going to see a massive recession. We're going to see a lot of people struggling to pay their bills. In fact, there's a lot of people right now that are struggling to pay their bills. There's a lot of people right now that are going through a financial crisis, all because inflation is going as rapidly as it is. Okay, so yeah, they're going to have to tighten up monetary policy as soon as possible, and that's why they started raising rates. Okay, let's talk about raising rates real quick. All right, I'm going to talk about a lot of things consistently because you guys have to get this. Okay, why are they raising rates? Who knows this, right? We spoke about it pretty much yesterday, but we also spoke about it last week. What is the point of raising rates, family? Answer that in the chat. Right? What is the point of raising rates? Why do you guys think they are raising rates, raising interest rates? I know some of you guys know. What do you guys think? Right? Let's see. I'm gonna give it another 10 seconds while I eat this muffin. Why do you think they're raising rates? U.S. debt. I mean, U.S. debt is there to get inflation down. Yeah. Right? They're raising interest rates to try to combat inflation, but what does interest rates really do? Okay? Interest rates makes it more expensive to lend, okay, to take out loans. Interest rates makes it more expensive to spend. Interest rates going up ultimately causes more people to stop spending money. You got to think about it like this, guys, right? They're trying to raise rates so that they stop people from spending money, so that they stop people to go ahead and using those dollar bills that they have. They are raising rates to try to control how much is being spent, because the more money people continue to spend, the higher inflation is going to be. Hope this makes sense. Okay, yeah. To stop people from spending and saving instead. Exactly, Kyle. To control the economy. Exactly. Right, let's see what else we got. Slow spending. Yeah, exactly. Right, reduce easy money. Yep. Raise the price of lending. Yep, exactly. Now, when they try to control how people are spending, and when now people are forced to not buy that car or not take out certain loans, I hope you guys are, if you guys are with me, family, drop some sevens in the chat. Because like I said, this is information you don't really get from other Forex traders, right? Because I'm going to be honest, 95% of Forex traders are really not that up to par with fundamentals. I'm not even as good as I need to be, right? Like I really am considering like really taking an economic course so that I could really become so much better understanding how fundamentals work. Because fundamental analysis is what controls the currency market. Fundamentals controls every financial market, right? So I'm really considering really taking a bunch of economic courses so I could really get better myself. But yeah, when they try to stop you from spending because they're raising the cost of everything, they're raising the cost of lending, now guess what happens? When people are now sitting on cash more often, when people are now hoarding their dollar bills, they're just letting it sit in the bank instead of going ahead and spending it. What does that do for supply and demand? Right? That's tightening up the supply that's going to be available because people are not spending as much. And when there's less supply available, the demand for the currency goes up, which causes the actual currency to also increase in value. This is some sauce, family. This is some sauce. Shout out to you, Tierra. I see you in the building. Shout out to you. I'm telling you, this is that information that you really don't be getting other places. Let's see what else we got here. Money is being printed too fast and it's not enough. Yeah, they've been printing money like crazy. All right, but then printing money, like this is another thing you have to understand, right? When we were getting stimulus packages, right, or when people were getting stimulus checks about 2 years ago, right, at the start of the pandemic, okay, do you guys really know what the point of those stimulus checks were? Like you guys were, I mean, I'm not saying you guys specifically, right, but everybody was celebrating because they were getting stimulus checks when the whole point of a stimulus check was to stimulate the economy. Because with obviously COVID, it made a lot of it brought a lot of fear into the markets. It brought a lot of fear into this whole world, which was technically possibly, right, going to cause a collapse of the economy. So what they did is they're like, yo, we know people love spending money. Let's go ahead and give them some free money. But in reality, it's not free because we're now paying for all that money that was printed to give out all these stimulus checks. You got to understand the Federal Reserve and the people that make those decisions, they're not idiots. They know that 90% of people are going to get money and they're going to spend it immediately. Why? Because most people are consumers, right? They get money, they consume something, and they want to spend to actually get it. They're spending money, spending. So that was their way of trying to stimulate and prop up the economy on top of what they were doing. Obviously, the Federal Reserve, they were also buying bonds after like billions of dollars worth of government-backed bonds every single month as well, which also stimulated the economy. Right, but we're also paying for it right now with inflation going the way that it is. Right, there was a fifth of all U.S. dollars in circulation. A fifth literally happened, was created, was printed over the past 2 years. So yeah, everybody was excited about stimulus checks, but now nobody's excited about how much gas is. But now everybody's mad that a gallon of milk is $4 or $5, $6 in some places. Right? That's the cost of getting those things. That's the cost of dealing with what happened. All right, let's see. How long have you been trading? I've been trading for 7 years now, right? Which is actually is going on 7 years. All right, I've been trading since 2015. 2015, right? It's been a little while now. And the crazy thing is, and I'm very transparent. If you guys know me, you guys know I'm probably one of the most transparent people that actually teach and actually educate on this information, right? I've been trading for 7 years, but I just now started taking fundamental analysis seriously over the past maybe 2-3 years. Okay, so I've been trading for a whole ass 7. My first 2 years, I didn't make no money. I wasn't profitable whatsoever my first 2 years. I blew account after account after account after account. I probably blew more accounts than every single one of you guys on this call over the course of my first 2 years. Right? So it took me around 2.5 to 3 years to really gain confidence, really get my discipline down packed, to then really start to see some money. But even after that, I still didn't really get into fundamentals until another 2-3 years later. But once I really started to understand how important fundamental analysis is, it really started changing the game for me. Because now I don't just think about the market from a technical perspective, right? Because me in the past, I used to come to the markets and be like, oh man, technical analysis, let me see what this trend line is doing. Let me see what this support and resistance is doing. Let me see what this and that, let me see what structure is looking like, right? Which all that is, it could be important to you, right? But when you really look at things from a fundamental standpoint, because you know the state of the economy, because you know of certain factors that are going to affect these markets, then you go ahead and you lead with a fundamental approach and you align technicals to line up with that. That's what the real money makers are doing. I'm just being honest. That's what the real successful traders are doing. They don't just come and be like, oh yeah, look at structure, da-da-da. No, they figure out a fundamental bias and they use technical analysis to know when to get into the market. Use fundamentals as a directional bias, as a catalyst to figure out directional bias, and then use technicals to know when to get into the markets. Guys, again, if you're not taking notes, I feel sorry for you, right? I feel sorry for you. You should be writing that down. Use fundamental analysis to figure out long-term direction. Use technical analysis to know exactly when it's time to get into the markets. That's some sauce. That's some sauce. All right, let's see what we got here. Let's see what we got here. I do my best to follow the fundamentals of different countries that we trade from. Yeah, that's important. Knowing exactly what's going on is key. Let's see. Now we went crazy with the spinner. Yep. Yo, what's up, Abel? Been following you since 2018. My boy Christian, he told me to plug into your YouTube lives for some gems. First of all, shout out to you and shout out to your boy Christian for telling you to get on here. Because, again, I'm going to be providing a lot of value to everybody that's on this call. All right, let's see what we got here. Exactly. This is crazy facts. Yep. United States isn't going to invest in something that they are not going to back. Yep. Let's see. So to get things right, raising rates is to control the spending of money to keep supply of things level so the demand of the dollar increases. Yeah, pretty much. That's pretty much what it is. Right? Raising rates is just their way to try to control the state of the economy as a whole and try to really combat inflation and try to get it to more of a quote-unquote healthy level, which is around 2 to 3%, which is normally what they want. Right? So that's a bar. This is information, family, all right? So let's go ahead. Be aware of this, right? Next month, we do have the next federal funds rate. The rumor, in my opinion, is that they're going to raise rates by another 0.5%. So we want to position ourselves now so that we could try to align with the big money, because the dumb money, and that's not calling anybody particularly dumb, but the dumb money is going to try to trade during the actual release. No, you guys are smarter than that now, right? We know that we want to get in before then. So let's go ahead and take a look at the markets and see what we got going on as well. Now, keep in mind, guys, we do have PPI data coming out tomorrow as well, right? PPI data is another way to measure inflation, but this is more from a producer standpoint, all right? So it measures the change in the price of finished goods and services sold by producers, right? So core CPI is inflation from a consumer standpoint, which is everybody that's on this call. We are all consumers. Where PPI is inflation, an indicator that measures inflation from the producer standpoint. So how much is going to cost a lot of these businesses to actually operate. So PPI is also something that's going to be very, very important for us to be aware of going into tomorrow. So be aware of this. Tomorrow at 8:30, we could have some volatility into the markets based on this. Okay? You guys with me? Drop some sevens in the chat if you guys are with me. If you guys haven't liked the video at all, neither, guys, please go ahead and like this video. I know I hate to sound like that annoying person that's always telling you guys to like the video, but it does help this get out much quicker to other people, right? Because like I said, I want to be one of the top channels on YouTube when it comes to Forex content and investing content as a whole, trading content as a whole. All right, so now let's go ahead and take a look at the markets and see what we ultimately got here, right? So based off data, right, based off what happened this morning, okay, let me show you guys what happened this morning and how the actual market reacted to this morning. Okay, so data came out at 8:30 a.m. Eastern Standard Time, and we seen this initial spike up to the upside, right? In fact, we actually called out a few trades, right? I sent a few trades to you guys in my Telegram. If you guys are not a part of my Telegram, it is a free Telegram. Anybody can go in there. Anybody can have access to it as long as you're being respectful, as long as you're in there just trying to learn or educate, or even if you're experienced and you want to go ahead and provide some value of yourself, by all means, I encourage that stuff, right? Go ahead and just hit the link in the bio. If for some reason it's not working, just go to my Instagram. It's also in the bio in my Instagram as well. And yeah, we sent out a couple ideas pretty much predicting what we thought was going to happen with CPI. And if I'm being honest, we caught a banger of a trade, right? GJ ended up missing our entry. I wasn't able to get into GJ because it moved way too quickly. And I know it actually went back up to that area, but unfortunately I had removed my sell limit and that thing did end up tanking like crazy, right? So I know some of y'all was able to take advantage of GJ. I know some of y'all was able to take advantage of EU, right? Euro USD. And those were both two trade ideas that I literally gave to you guys yesterday before the news release. And we also spoke about it on last night's call. So if you guys actually took any of those trades, let me know in the chats, family, if you guys took any of those trades. Because they were bangers. They were absolute bangers. Like, I'm talking about bangers. All right, so looking at the dollar index, though, all right, what do we think can happen next? Well, for the most part, we're just very range bound right now. Like, this market, guys, really is just accumulating orders, right? It's just going sideways, not really giving us no real long-term directional bias whatsoever. Like, we're just pretty much trapped in between, you know, this little range that we've been in. Now, what is my bias personally for the dollar index? For me personally, okay, and I could be wrong with this, right? Because I had a conversation with the boy Skaggs earlier, and he really pointed some things out, right? But for me right now, I'm still going against what Skaggs said. right? And just to put perspective, right? Like Skaggs is one of my mentors, right? So whenever he points something out, I'm usually like, okay, I understand that. But for me, I still want to see price come down to around the 102.9 level. And I'm still looking for some more bullish plays. And again, I could be wrong, right? We might actually see price really go ahead and plateau up here. And we might see a deeper correction. Okay? And if it happens, that's fine. Then we'll just adjust. But for me, I really, really want to see price continue. Okay? I really think that we still could possibly see price really continue higher. But this is the thing, guys, right? Let's look at the dollar index from the daily perspective. Okay, now for those of you guys that are new and trying to figure out what the DXY is, this is an index that measures the strength of the US dollar against a bucket of other currencies. Okay, it's a bucket of other currencies, right? Things like 13, 14, 15 different currencies or something that is in that bucket that the dollar is being measured against. So it's important to really look at this, in my opinion, because the US dollar is the currency reserve of the world, right? If we can figure out a bias with the dollar, then we might be able to figure out something else against the, at least correlated with other currency pairs that are traded against the dollar, right? So for me, I wouldn't be surprised if we see price continue, but I also understand the perspective of this thing actually correcting some, okay? Because we have been on an absolute tear. Right now, one big misconception that a lot of traders have is that after such a strong run, the market has to pull back. The market doesn't have to do a damn thing. Okay, just because we've been bullish for so long doesn't mean that it has to pull back. I mean, yeah, you can try to use that as a clue, but that doesn't necessarily mean that it has to pull back. But I also wouldn't be upset or surprised if it did. Because we are seeing, and again, this is something that I was really learning today and really just putting, into play a little bit more today. And that's really understanding volume. Right now, I'm not going to get in depth with reading volume because I'm not that knowledgeable in reading volume to try to come on here and teach you guys, right? Like, I understand the basic concepts of it, right? I understand the basics of it, but there's still so much more to really put into it, right? So I'm not going to get into that today. But again, for me, just based off what we're looking at, yes, we're extremely bullish. Okay, yes, there is a possibility for price to eventually want to go ahead and correct. Okay, and if we actually end up closing below, right, if we break below the previous days and close below the previous daily candle, if we close below the previous daily candle, then yeah, I believe we're probably going to start to see a pullback. Right, that's very possible. Right, we might end up seeing prices come all the way right back to, this 100 level, round psychological level right here that it just looks very sexy. Right, the 100 level is just a sexy level to pull back into. Right, so if we do end up closing below for the daily candle, if we get a close below, then I believe we're gonna continue all the way down to retest this order block, retest the 50 period moving average, retest that 100 round psychological level, right? Just really go ahead and retest a bunch of these levels down here before we continue bullish. Because this is the thing, right? Whether we correct or not, I'm still going to be expecting long-term bullishness. I've been calling dollar strength for the past year now. And we've been absolutely on fire. We've been calling dollar strength all the way since down here. Right, and if you've been on any of my sessions when I was teaching over on the other platform, you guys can also confirm that. We've been calling dollar buys for a while now, right? And it's because of everything that we've been dealing with, okay? So either way, if we do pull back and we end up closing below this daily candle, I'm expecting more downside. But for now, I'm still bullish, all right? I'm still bullish the dollar. I think we can see price end up spiking below this level, and that's why it's important to really wait for that, not just a break below the last daily candle, but a closure below the last daily candle is going to be important. Okay, I don't really care about the break below it. I want to see the closure below it. If we close below this dotted line, right, tomorrow's daily candle, then I'm expecting more downside. But if we actually just spike down into this level down here, into this area of imbalance, then from there, I think we could still see more momentum higher. Okay, I really do. I really do. That's just what my gut is telling me. And I always like to go with my gut, even if I'm proven wrong. Because even if I'm proven wrong, that's an opportunity for me to grow from. And this is what I want to tell a lot of you guys, right? A lot of us are fearing failure, are fearing accepting losses in this market, not realizing that those losses are now opportunities for us to get better on. Like, really, be honest with me, family. Right? Be honest with me real quick, right? How many of you guys are struggling with trading because of the fear that you guys have of taking losses? Now, I know some of y'all is not gonna admit it, and it's cool, right? You can lie to me, but just don't lie to yourself at the end of the day, right? But how many of you guys are going through that? Right? What do you guys think? How many of you guys are really fearful of taking losses? Let's see what we got. Let me catch up with the comments real quick because y'all going crazy. Let's see. 35% of all currencies printed in 2 years. Yep. I think the Fed going to come out with a 0.75 or a full. That would be crazy if they do a full basis point. I mean, it's possible, right? Anything is possible to try to combat inflation. But you got to think about it, right? If they raise rates if they raise rates to a full, like if they do a full basis point, then that's probably going to send us into a real recession. And that's what they're trying to avoid, right? They can't raise rates too fast because then we're going to go into a recession. Okay? Even though I believe we're already in a recession, right? But if they raise it too fast, then that can really hurt us because then we're really going to go into a recession. So it's possible, but that would be crazy. That would be crazy. Let's see what else we got here. Yes, GJ and EU blessed. Yeah, GJ and EU absolutely went crazy. Let's see, got stopped out in GG while I was asleep. That sucks. I ended up missing it because I ended up closing out my trade. All right, but it went absolutely crazy. Let's see, I'm waiting for completed rising wedge on the 4 hour before I start trying to sell. Okay. Volume price analysis. There's a book by Anna. Compliment if anyone wants to learn more. I appreciate that. All right, again, I'm always a student, family. Right, I think this is why I've been able to see so much success. Right, is because no matter what I've been able to get so far, no matter how far, I'm always still trying to improve and get better. All right, so let me take this now. Volume price analysis by Anna Coolin. Anna Cooling. Cool. I'm gonna check that out. Let's see. I'm learning each day to detach my emotions from that, but I was way more fearful at the beginning of the year. Yep. Me. That's me. Been working on that fear since I started. Don't mind the L once I learn. Yep. Man, you don't need to be in my autobiography of my trading life. No, I'm not afraid. I should get a better understanding of when to exit. Yeah, that's key. Let's see. Used to, not no more, knowing how much I'm risking per trade. Yeah, that's key, Rodney. Right? I mean, when you know how much you're risking to begin with, you're usually in good shape. Let's see. I think they are going to raise rates faster than we think, then reverse course faster than we think. F the Fed, yeah. You might be right, Payne. But again, it's just that battle between them trying to control inflation, but them also trying to make sure we don't go into a recession. Right? That's the hard part. Right? So again, the question that I asked though, guys, right, is how many of you guys are really struggling, probably because of the fear that you guys are having. This is the thing that really helped me out, right? Was really not being fearful of taking losses because I was just taking losses, but being able to turn that loss into a lesson was the biggest thing for me, right? Because anytime I did take a loss, I didn't look at it as a loss now. I don't look at losses as a loss, okay? I look at losses as a potential lesson. All right, what went right? What went wrong? Did I do something wrong, or did the market just win? Right? This is another big thing we have to understand, guys, right? We're not going to win every single trade. It doesn't matter how good you are at trading. It doesn't matter how good your analysis is. If the market is going to go against you, it's going to go against you. And that's why it's important to really differentiate the two. Did you take a loss because of your careless decision making, because your emotional based decision making, or did you take a loss because the market just decided to do what they had to do? Okay, I really like to say this. There's a good loss and then there's bad losses. For me, whenever I follow my rules to the T, and I take a loss, that's a good loss. I still followed my rules. There's nothing I could do after that. Right? I say this all the time. We have to worry on we have to focus on what we can control, not what we can't control. We have to focus on what we can control. We can control everything that has to dictate with us when it comes to taking a trade, how much risk we're going to be risking, the setups we're going to be looking at. We can control all that. We can't control overall market direction at the end of the day. All right. So whenever you do take a loss, as long as you followed your rules, you have to be able to move past it. A big reason why most people don't, though, is because they're not following the rules. Okay, you can follow your rules in terms of finding a setup, finding an opportunity, but are you following your rules when it comes to risk management? When it comes to money management? That's the biggest separator, family. Right? I'm talking to you guys because I really want y'all to succeed, right? It's people's risk management and people's money management, or their lack of, that causes people to not succeed in this. Everybody wants to get rich overnight. That's the big issue here. Everybody wants to see success overnight. And the thing about trading, and this is actually a quote that I read the other day, right? Trading is really like a glass of fine wine, right? Where you get better with time. Abel's back with some bars. Trading is like fine wine. You get better with time. Okay, so you're not going to come in and just magically become that millionaire trader that you want to be. But over time, you definitely can if you're actually practicing the correct habits now. Okay, it's all about the habits that you're creating now early on. It's going to dictate on whether you actually become that 7, 8, 9-figure trader that you aspire to be. It's the habits. It's the habits, guys, right? Drop that word in the chat for me. Habits. Habits. Drop that word in the chat because this is some sauce. Let's see. When you remove fears, when you truly learn to trade. Yeah, exactly. I was until I started to understand managing risk. Risk is important. I don't mind losses. It's the wanting more that gets me. Yeah, that's another one, right? That's another one, right? Feeling like you want more. On Amazon right now with purchasing Anna Coulin's book. Yeah, I'm actually going to get it too as well after this session, after this stream. Losses equals lessons. Another bar, yep. Never mad about a loss that occurs from following my plan. Yeah, that's key. Most people get mad because they don't even have a plan. Yeah, that's another one. Right? Most people don't have a plan. Right? But what separates the successful traders from the non-ones is literally just the habits that they've been able to develop. All right, so this is my opinion of dollar. Like I said, I think we could see this thing really continue going higher. But if for whatever reason we end up closing bearish for the day tomorrow and we close below, right? If we end up closing below 103 tomorrow, then I'm expecting more downside for sure. Okay, so let's go take a look at the markets now, see what else we got here, guys. Take a look at gold. I'll take a look at Euro USD. I actually have an interesting setup on Euro JPY that I'm going to be taking an eye on that I want you guys to take a look at as well. And then we'll look at GJ, and then I want to get into just going over prop firms really quickly as well. All right, because prop firms are, in my opinion, just a little heads up, I think everybody, especially if you're trading with a small amount of capital, then I really think prop firms can benefit you, right? But we'll talk about that in a few. All right, so let's see what we got here for gold, guys. Gold did exactly what we wanted it to do, right? Like, remember last week, I told you guys from last week that I wanted to see gold go all the way down and retest this order block that we have right here around the 1830 levels, right? I know some of y'all remember that. Right? I said I wanted to see price. I expected gold to continue selling off. A big reason for that is just because really just looking at very simple structure. Right? For one, we seen this massive push down that broke below a key level of structure. We started to retest that area. We were below the 50. So I expected more downside to come back to another level of structure. The area that I was really anticipating for price to come to was this 1830, just because we had some momentum really pick up in this level right here, right? That ultimately ended up breaking levels of structure. Like this move, this one candle right here, okay? This order block, this buy, bear, buy, sell, buy candle sequence right here, like this whole little 3 candlestick pattern is crucial, right? Buy, sell, buy candle that ended up breaking a key level of structure, creating a new high. In my opinion, when I see things like this, that tells me that there's a lot of smart money behind that, right? There's a lot of big orders that were literally entered into that market at that specific time that caused price to break that. Okay? And not just that, but I mean, that really started a massive move higher. So I really wanted to see price get to that level down here. All right, so now that we're here, now what can we see next? What can we expect next? Well, now that we're at that 1830 level, I believe we could start to see price go higher. I could be wrong, but this is what I'm leaning towards, right? I believe we can now possibly see price really go ahead and really shift and go all the way back up to around the 1900 levels, right? Specifically, probably retest this zone right up here once again around 1910s, right? That's what I'm looking at. And again, we're on a daily time frame right now for gold, right? So, you know, it's a little bit of a larger time frame, but I think that we could really start to see, you know, a real shift higher, right? I could have had entries on gold down here, but I was clueless, right? Because I was given the signal, and I don't ever take signals like that, right? I don't take signals too often whatsoever, but I was given a signal to literally buy gold down here, and I just ignored it, unfortunately. Right? Unfortunately. All right, unfortunately, right? I was given the signal and I completely ignored it. All right, but I do think that we still have some more upside, right? Especially if we can go ahead and really close above this level right here, like really break above this 1850 level. If we can stay, which we already broke above it, right? If we can stay above this 1850 level, then I really like more upside. Okay, I really like more upside, right? So if we can stay above that 1850 and eventually come up and probably retest his 1870s level, right? And I'm just really highlighting some key levels, guys, that we can really expect price to come to and give us some type of reaction from, right? So like these are going to be like our checkpoints on the way up, right? If we are going to ultimately make it all the way back up to 1910, we already closed above 1850, which is cool, but we will have to break 1870s, and we also will have to break 1890s as well. Okay. Let's see, took an L and GJ hit my stop loss when I was work. If my stop loss would have been a bit bigger, I would have been fine. It happens, right? That literally happens. Let's see, this guy, you seeing distribution? Yes, I mean, he's definitely seeing distribution. Let's see, just a little bit, a minor detour in the overall trend, but Abel has his reasons for continuing to look forward, and I'm known to be the one against everyone else. Yep. Yeah, it happens. All right, again, we had conversations earlier, and this is why I can't wait to be able to, you know what, this is why I can't wait to have Skaggs to be able to have just be a guest on here, because then we'll really be able just to bounce off ideas, right? That's the thing. I don't ever marry a bias, right? And that's one thing we can't do as traders. It's important to be confident about a bias, but you don't want to marry a bias to a point where when data tells you it's time to change and you're not changing it, that's a problem. Right, so just being able to bounce off ideas from other traders that you know exactly that they know what they're looking at, that's crucial. Okay, but yeah, Skaggs is looking at the dollar index. He's thinking his distribution. I think his reaccumulation. So only time would tell, right, to see what actually happens. And no matter what, it doesn't matter about who's wrong. That's never what it's about. It's just about really just, you know, taking the information that you get afterwards and just making the best decision next. But overall, guys, like I really think we have some more upside for gold. Right, I'm really liking more upside for gold. So even if price ends up maybe pulling back a little bit, right, maybe down to around this 1845 level. Let me actually go to the smaller time frame, see what we're looking at. All right, because I really think we could have some opportunities to really go back to the upside. I mean, either this, let me see where we're at. Yeah, either this 1846 level or even maybe a deeper correction to come down and retest around 1840s is also very possible. But for whatever reason, if price ends up coming down here, then I'll probably be looking for more opportunities to go ahead and buy. All right, so 1840s, interesting level. And also 1848, 1847 level is another interesting level as well that I will be keeping my eyes on if I was looking to buy gold going into tomorrow. So we'll see what happens with it though. you know, be very cautious. You know, just play the structure levels at this point. You know, I already got my fundamental bias. I really think gold right now is at a point where we could go back bullish. You know, just because it is that safe, quote unquote, safe havenish type of asset. You know, with inflation, technically it went down compared to the last reading, but was still higher than what was actually predicted. We could see, you know, some money flowing into gold for the time being. So that's why I want to go ahead and really set up an opportunity, you know, to possibly go higher. So really gonna be looking at 1846, 1847 level. If price breaks that, then I'll be looking at buys around 1840 instead. Okay, I hope that makes sense. Right, so let's go take a look at Euro USD. Again, Euro USD was another one that really played out almost perfect for us. You know, we ended up catching a nice bag on that one. You know, the market did end up whiplashing like crazy, you know, but we ended up catching a nice bag. You know, very, very nice bag on Euro USD here. Now, what do I think is going to happen next? Well, again, the one thing about Euro USD, especially when you want to correlate with the dollar index, is that they do the exact opposite, right? And the reason for that is because the DXY, right? Remember that bucket of currencies I was talking about, that the DXY, that the dollar is being measured against? Majority of it is the euro. Like, it's made up of majority of the euro inside of that bucket of currencies that is being measured against. So that's why they have such a strong negative correlation with each other. So if I think that the market itself is possibly going to be bullish, or at least the dollar is going to continue going bullish, because I'm looking at it from a more of a reaccumulation phase, then I'll be looking at this from a more redistribution phase. It's just my opinion, right? Very possible for price to either give us a correction. Again, the daily closure that we get tomorrow is really going to help me identify a lot more. So I'm going to be very patient with that for sure. You know, but if we get to end up daily closure to break above these levels, if we break above and close above 1.06, then I'll probably be expecting more bullishness for the euro. But if we end up staying below this level, which again I think we are, I think we might end up having some momentum to go ahead and really run these lows. You know, we have these lows right here that were created with this last low right here, and ever since then we've just been accumulating. Right, we've just been accumulating more orders, and I think we still have a little bit more downside for sure. Right, like I said, you know, it is what it is. If I'm wrong, I'll just take the data, you know, and then I'll adjust. Right, that's what the best traders do. We don't mope around and try to complain and cry like, oh man, I was wrong. No, right, take the next data that you're given and then find the next opportunity. All right, so with that being said, what I'm going to be looking for going into tonight in terms of potential entries for euro, right? If we can come back up to around this, I would say 1.05 level, right? If we can come back up to around 1.055, that's where I'm going to be looking for an opportunity to catch another move lower. Okay, if we end up breaking that level, because my stops, this is what my setup is going to look like personally. Right, if we can come back up to here, it'll be dope. Right, my stops are going to be above the high. Okay, and then I'm going to go ahead and target somewhere to the downside. Right, I'll look for more targets in a second. But this is what I want to see tonight. Right, a possible move. Now, if price ends up continue going higher and I end up getting stopped out, then that's probably just going to lead into, like I said, that pull back for price to go, you know, back to the upside. Right, and if that happens, then I want to get out as soon as possible, look for the next best opportunity, and then go ahead and ride the next direction. But for now, I really like this price action, right? And I think that we can see price pull back up. If we can get that area back up to the 1.055, then I'm very interested in shorting this opportunity. Risking around 2%. We're not going to risk nothing crazy. 2% or less is what I recommend. And yeah, we'll just accept it, you know, whether it's a win or whether it's a loss. In terms of targets, you know, we can obviously target right back down to structure lows. I mean, right back down to the lows of structure down here at 1.0475. I mean, that's a 2.5 to 1 risk reward. So that's already good. Now, if we wanted to get some extended targets, let me see if we can find some extended targets using structure real quick. And I'm also going to use the fib extension tool as well, and see if we can find structure in that way as well, right? But let's see what we got. Let's see if we have any type of structure that we can probably target for Euro USD. I mean, yo, we are at some very strong levels too. We are at some very, very interesting levels as well. All right, so we can possibly, I mean, yeah, these levels are crazy. We're about to test like multi-year lows all the way down here. That's interesting, right? So yeah, I probably wouldn't be targeting past these lows personally. All right, like these current lows, I'm very comfortable taking the sell and really looking for price to at least come down to these lows at around 1.0475, right? So anything past that, I'm good on actually trying to ride out, just because we are about to really test some major areas of demand that could possibly really send this thing higher. So crazy thing is, I'm looking at it one way. Again, other people might be looking at it a different way, but it really still might all play out in a very similar manner. Like I could still catch this sell off down here, price end up tapping below this low right here into a nice strong level of demand, and then price ends up going ahead and reversing and giving this push back up. That's very possible as well. So that's pretty much what I'm gonna be playing, right? And it looks really good. It looks really good, right? So that's what I'm looking for going into tonight. If we're wrong, it is what it is. All right, let's go take a look at GJ real quick. See what we got for GJ. Again, GJ is definitely a fan favorite. I know a lot of people love GJ. GJ was interesting. We ended up calling the short from up here. All right, I think it was around 161.100, if I'm correct. I believe that's where I ended up telling people that I was looking for, around 161.100. All right, and I mean, price just went crazy, like absolutely tanked. Now, in terms of the stop loss, right, I think, again, I didn't even catch this trade. You know, I ended up taking it off the table. I ended up deleting my sell limit. It is what it is. All right, but I know a lot of people that were able to catch that. In terms of stop losses, I believe I had the stops right above here too. So that's probably why some of you guys might have got stopped out. Just because the stop was a little bit tighter. Right, and I was really just trying to play off of the order block that we had in the smaller time frame, which is why I had my stop loss in that specific area. But you know, it's one of those situations where it is what it is, right? Like I literally had my stop loss. I think we had it like right above this order block right here, and price literally spiked right above there, and then immediately just dropped for around 200 pips. So overall, it was still a really good trade. Again, I wasn't able to get into it. I just ended up closing it out, you know, just because of the news. I'm not sure why I did, but it is what it is. But what do we think can happen next? Right? Because a big reason why I was actually looking to sell GJ is because I really wanted it to get into this entire range that we have here, right? We have this entire zone, guys, that is just chilling, right? Let me actually go ahead and mark it up for y'all. And I just expected the market to really go ahead and break those lows that we had right here. Let me show you guys what I was looking at. All right, so I really wanted to see price just go ahead and run these lows, like literally. All right, and price did just that. Like literally came all the way down and broke right below and rode into those lows. Now, what can we expect next? Well, I think, and I could be wrong, okay, but I believe the pound itself still is gonna, in my opinion, gonna be stronger than the yen. All right, so I wouldn't be surprised if once we actually get down to around 157.900 or 156 round level, that we actually see some type of bullish reaction, you know, for GJ. Just my opinion, okay? I could be wrong, right? But that's where I'm really interested. It's either we're going to bounce off that 150, 158 level, or we could even go a little bit lower. I mean, it's possible for us to go lower, right? Just to go ahead and retest this zone right here, but I'm really looking for this 158 level, right? If we can come down to that 158 level and really get some bullish reactions off of that, I'll ride that up. If not, if we actually break that, then we're probably going to ride down to around 155, and then around 155 we'll have to just figure out what we want to do next. But overall, I think this 158 level could be a level where we really just keep our eyes on. And if we get some type of bullish break of structure, then that can give us an opportunity to really start pushing us back to the upside. Okay, so that's GJ. Very interesting. Very nice setup as well. All right, so those are just a few setups, guys, that I'm actually looking at going into tonight. Keep your eyes on them. All right, keep your eyes on these areas. Again, Euro USD setting up. Gold is setting up nicely. But But let's talk about prop firms real quick. All right, let's talk about prop firms real quick. Okay, let's see. Waiting for a spring test on EU. Yes, possible. Can I get your analysis on GCAD? Yeah, I'll take a look at it in a second. Right, but let's go ahead and get into the prop firms real quick. Because prop firms, in my opinion, guys, are what most traders should take advantage of, and there's a few reasons for that, right? So what is a prop firm anyways? A prop firm is a company that actually gives people the ability to trade their money, right? You pretty much become a trader for that platform or that company if you're able to qualify, okay? How a prop firm works is that there's different prop firms, right? And they do different ways of actually getting a funded account. But the most commonly used way is to actually do a challenge to see if you qualify to even get funded. Okay, because when you do get funded, you're actually trading an actual live account for that company, and there is a profit split that comes with that. All right, there's two of the most popular ones out there. There's a bunch out there, right? But two of the more popular ones that I'm aware of is FTMO, which is pretty much like the leading standard for prop firms. It's like the big homie of the group, FTMO. Okay, and then we also have My Forex Fund, which is another one that is also pretty much one of the main ones that's being used out there, right? So we have FTMO, which FTMO.com, and then we have MyForexFunds.com. There's a bunch of other ones, right? Like there's Trader Central, there's Top Tier Traders, like there's a bunch out there, right? But these are the two most commonly known ones right here. Now again, the whole point of the reason why I personally like prop firms is because yes, it's hard to trade, but it actually gives you some type of direction. It gives you rules that you can follow. A big reason why most people do not succeed in trading is because they're trading without no plan, without no set of guidelines, without no set of rules whatsoever. But when you trade one of these prop firms, you're actually given a set of rules, a set of perimeters that you have to follow, and that helps you create some type of discipline in these markets. So this is how it works. For those two prop firms, you have to pass two challenge phases. Phase 1 is the first phase, and typically you have to make either 10% on your account or 8% on your account. Okay, with FTMO, I believe it's still 10% to pass phase 1. With My Forex Funds, you need 8% to pass phase 1 of their challenge. Somebody correct me if I'm wrong. All right, for FTMO, it's 10% on your account, right? So if you have a 100K account, you have to make 10% of that, and then you can go ahead and qualify to go into phase number 2. Now for phase number 2 for both of them, they're both 5%. Okay, so if you can make 10% on FTMO, and then you go to the next phase and you make 5% on the next phase, then you now qualify to actually get a live account. Okay, with FTMO, once you get to that live account, you're able to make a portion of the profits that you're actually able to make for that month. So for the month that you're actually on the live account, if you were to say make 10%, you will get, I believe it's a 90% split now for FTMO since they raised it. Receive up to 90, right? I believe there's different rules and stuff to this though. Let's actually go ahead and bring it up real quick. Right? It's either 80 or 90% for FTMO. So if you make 10%, you get 80%. The company keeps 10%. All right? A big reason why this is cool is because in order for you to actually get one of these accounts and qualify, you're actually paying a very small fee. Right? Like I actually want to bring it up so you guys can see what the fees are as well. I wish I would have did this earlier so it would have been all set up. Right? But let me go ahead and bring this up for y'all. Right, because this is important. Right, again, if you can, I would rather you guys invest $200-300 into going through one of these challenges, opposed to you trying to trade $200-300 of your own account, of your own money, right? Because then you're gonna try to take that $200-300 and turn it to $1 million overnight, and that's just not gonna work. At least if you invest $200-300 into these prop firms to get a funded account, or at least go through the challenges, you can follow the rules and the guidelines that they have, and you're actually able to create and develop positive trading habits throughout the course of the actual challenge itself. Okay, I hope this makes sense. All right, so let me see what we got here. I see we got 62 likes on the video as well. I appreciate every single one of y'all that definitely liked this video. Again, I do this for you guys that show me support. So thank you guys so much. It definitely means a lot. All right, so let's go ahead and see this real quick. And again, family, also after this, go ahead and take some time to even go through this yourself. You guys have the websites now, ftmo.com and myforexfunds.com. Okay, so let's see. Let me show you guys exactly how much it costs. All right, so if you guys want to trade a $10,000 account, yep, that's normal risk. It is 155, what is this, euros? All right, yeah, something like that. How do I even know that? It is 155 euros, right? I'm not sure what that converts to in dollars, right? But it's 155 to be able to go through a challenge that can give you access to $10,000 trading account. That's not bad. All right, $25,000 account. We're talking about 250 euros or pounds. I'm like having a brain fart right now. Give me 1 second. No, it's definitely the euros. Right, so it's 250 euros for a $25,000 account. For a $50,000 account, it's 345. Right, 100,000 is 540 euros, and then a $200,000 account is 1,080 euros. Okay, that's to actually start the actual challenges, the steps to potentially qualify to be able to trade a live account. Now, again, there are different perimeters and rules that you have to abide by. So for the first step, you're given 30 days to accomplish the first phase. Okay? You have 10 minimum trading days that you have to trade with FTMO. Now, this is the part that really most people do not pay attention to when it comes to these prop firms. The max daily loss that you can lose is $500. So if you lose $500 on that $10,000 account, you automatically lose and you're done. You don't get no refund. You lose the challenge. Now you have to repay it to actually try to get it again. The thing is, guys, right? Understand this. Your max loss is only 1,000. So you're really only able to lose 10% until you actually fail the challenge. What most traders do when they try to do these prop firms is that they're trading based off the entire $10,000 account instead of trading off the 10% that they're actually given. So in reality, when you're actually creating your risk management, you shouldn't be doing it on the 10,000. You need to do it on the 10%, your max loss. So if you're risking, say, 1%, you don't do the 1% risk off the 10,000. You do the 1% risk off your maximum loss, which is the 1,000. And that's what most traders don't do. And that's why most people are blowing these accounts and failing these challenges literally so quickly. It's because they believe that they have the whole 10,000 that they could trade with. No, right? The whole point of these prop firms, guys, is really just to try to teach you guys positive trading habits. But you also have to really understand that this game, they're not giving you as much as is really being advertised. So for a $10,000 account, you need to really act like it's a $1,000 account. For a $25,000 account, you really need to treat it like a $2,500 account. For a $50,000 account, you really need to trade it like a $5,000 account, right? And so on and so forth. For a $100,000, you need to treat it like a $10,000. And then for a $200,000, you need to treat it as if it's a $20,000 account, because that 10% is all you get. Once you lose more than 10%, you already lost the challenge. And now you got to refund it to try to get it back once again, right? I hope this is making sense, guys, right? So again, if you do decide to do this, do not base your risk management off the actual account size. Do your risk management based off the max loss that they're giving you, which is usually 10%, which is what most of these prop firms give you. Okay, so if that makes sense, drop some sevens in the chat, family. right? Because this is important. This is the thing that kills most traders when they do this. Okay. Now, a cool thing as well is that if you are able to pass step number 1 of the challenge, right, they will refund you your actual fee that you paid to actually get started. Okay, so if you can pass step 1, right, or actually if you pass to become an actual live trader, I apologize, I take that back. If you actually pass to actually become a live funded trader, they will refund you the actual fee that you paid. So that's pretty lit. Okay, if you actually become a live trader, they will refund you the funds. All right, so this is FTMO. Let's go ahead and take a look at my Forex funds, because like I said, it's a little bit different. It's all very similar in terms of you have to take 2 phases that you have to pay to actually qualify for the live account, but the pricing is a little different, right? My Forex funds from last time I seen it is actually a little bit cheaper, and the rules are a little bit, more lenient as well, right? So let me go ahead and bring this up so you guys can see this one. All right, yep. All right, come on. Let's see. Makes sense. Amazing. I failed my first attempt on MFF due to the 5% daily rule. Yeah, you have to make sure that you're leveraging, right? So if you're looking at the 5% daily, then make sure your risk management is based around also that 5% daily rule, right? So look at this right here. These are the actual rules now for my Forex fund. So we have a 5% daily drawdown, which is the same of FTMO. But a difference right here is the overall drawdown. You actually get an extra 2% for my Forex funds. An extra 2% is a big deal, right? So the overall max that you can lose on FTMO is 10%, but the overall max that you can lose here is 12%. Give me that extra 2%. I need that. Okay, another difference as well is the profit targets. So with FTMO, like we've seen, it is 10% phase 1. For my Forex funds, it's 8% phase 1. All right, that 2% difference matters. All right, now phase number 2 is the same thing as FTMO, where it's 5%. Right, so that doesn't change. Another big difference as well is that there's a 5 trading day minimum for my Forex funds, where with FTMO, it's a 10-day trading minimum, which means you have to place a trade for a minimum of 10 days out the 30 days that they give you for FTMO. But for my Forex funds, you have to place a minimum of 5 trades, or 5 trades for 5 days within the 30-day period. So if you end up passing your challenge in the first day, which is possible, you still have to place trades on these next remaining days in order for you to still qualify for the next thing, right? So let me go ahead and see. Now, those are the main rules that you guys want to pay attention to. Let's go ahead and see what we got here. In terms of profit sharing, right, for my Forex funds, you're paid out 75% of your profit, right? So it's a 75-15% split, 75-15 split, where you collect 75% of the profits. The company keeps 15%. But once you get to your second month of your live account, it goes up to 80% of your profit, right? And then your third month, it goes up to 85%, which is absolutely crazy. Now, let's look at the difference in pricings, right? So, for a $10,000, and this is why I think my Forex fund is probably going to be the most popular one for you guys, just because the rules are more lenient. It's a little bit easier to pass, right? And you also get that 12% buffer, but the pricing is so much cheaper, right? So, it's only $84 USD to get a $10,000 account. Now, again, keep in mind, you don't base your risk management off the 10,000. You base it off the overall drawdown. So you're essentially paying $84 to potentially trade a $1,200 account. That's not bad whatsoever, right? So that's not bad. So if you only have $100 to trade with, instead of putting that $100 into your trading account and then start trading aggressively because you're not satisfied with making $1, $2 a trade, take that $100, get this $10,000 account, go through the phases, which again is going to help you develop positive habits anyways, and then you have the potential of trading a $10,000 account, but overall it's really a $1,200 account, so you're actually able to see a little bit more profits than you're you would with $100 trading account of your own. So it's only $84, right? For a $20,000 account, $140, $50,000 account, $300, $100,000 account, $500, and then $200,000 is pretty much $980. So again, this is definitely cheaper. This is the cheaper route to go. My Forex funds is also the more lenient route because they give you that 12% buffer, and you also have less trading days. I'm a big fan of my Forex funds personally, just because of everything that I just mentioned. But again, FTMO is the standard. You know, it's like the one that everyone pretty much goes to in the beginning because they're the ones that really made a name for themselves. But so has my Forex fund, right? So either way, you can't go wrong with either of them. They're really here, guys, to help you develop positive trading habits, which is the most important part of this whole thing. You have to really focus on becoming the best trader possible, and you do that by following the rules that they are giving you. Okay, so only risking 1% is crucial here. You don't want to be risking 5%, 10%, 20% because you're gonna end up blowing that account. You're gonna end up failing the challenge. So really stick to like a 1% or less rule with this, and you'll see you actually passing these challenges in no time. And you're also developing these habits, so whenever you do get to your own account, right, say you pass these phases, you pass the live account, you get your first payout, and now you want to fund your own account. Now you'll still have those habits that you can use to help you build your own account. That's the biggest difference here. Let's see, thoughts on Mint Funded. I've heard of Mint Funding, but I have not looked into it too much. Right, I've heard of it, but I have not looked into it too much, so I really can't give you anything. Let's see also, bro, one of the rules in my Forex fund is the max daily drawdown is on the equity of the day instead of balance like in FTMO. That is a big one. Right, that is a big one as well. Right, I appreciate that, Mo, because that is a big one. Right, but these are the differences that we have here. Again, my recommendation, I can't tell you guys what to do, but I recommend for you guys to really consider going the prop firm route as opposed to just trying to trade your account, because you're going to trade your account very recklessly because you're not going to be satisfied with making 100 or with making a couple dollars here and there. That's just the reality, right? Placing $100 into a trading account with a goal of trying to turn it into $1 million, like that's not going to really help you develop what you need to really develop. All right, but if you take $100, get this $10,000 account, and now you have certain perimeters and rules that you have to follow, it's going to help you not only get access to larger capital, but it's also going to help you out tremendously. Okay? Let's see, that's also I feel. I switched from a 1% risk to a 2%. Yeah, no, with these prop firms, guys, like 1% or less, unless you're experienced. Okay? Unless you're experienced. If you already know how to trade and you're profitable and you just want to, do this just for whatever, then do your thing. All right? But if you're not, 1% or less. Okay, for me, I'm at a point in my trading career where I only do these challenges just so that I could say that I did it. All right, it's more so just for the credentials, right? Because just to say that you're a FTMO funded trader is just a good look, right? Just to say that you're a My Forex fund funded trader, that's a good look, right? So that's why I personally do it, just to add the credentials onto my name, right? Because I really don't need, right? Because I have my own account, right? Which is pretty decent size, but this is important. Go ahead and do this. Leverage this, right? This will help you out tremendously. It gives you rules, and that's the biggest thing. It gives you rules and perimeters to follow, as opposed to trading with your own account where you don't have no rules that you're really following. You're just trading crazy and hoping for $1 million, right? So that's the difference, guys. Take advantage of either or. Again, I really like my Forex funds. I was actually talking to another prop from earlier today as well. They're called Trader Central. Trader Central is pretty dope. I used to use them back in the day. About a year ago, I used to use them. And I actually went through their whole process as well. And they were pretty good. And they're actually considering sponsoring me as well, right? So we'll see what happens, right? If they end up sponsoring me, then we all might have to go to Trader Central, right? But we'll see what happens with that, though. But in the meantime, family, that's pretty much what I got for you guys today. Let me just take a look at this GBP CAD. I believe it was GBP CAD. Can you upgrade after passing? So what you can do, right? If you actually pass, say, a $10,000 account and you want to get a larger account, or this is actually something that you can do. You can actually combine different accounts, right? So say you pass the $10,000 account, and then you also do another $10,000 account and you pass that one as well. You can actually reach out to them and just tell them like, yo, I want to combine both of these. And then they'll go ahead and just combine both of those accounts and give you a $20,000 account instead. So that's what you can actually do. All right, but let me go ahead and take a look at this GCAD. Let's see. I think it was, yeah, it's GCAD. All right, I got you. You have to be a trader for a certain amount of time before you do this. I mean, I wouldn't say you have to be you do got to have some type of strategy, right? Because you don't want to just do this and just start throwing random trades, right? You do have to have some type of set strategy that you're already trying out, that you're already a little familiar with, that you already were using demo on, right? And then want to do, you don't want to just do one of those and just rant, no, right? For that, you might as well stick on demo until you're able to find a strategy that you're comfortable with, right? But yeah, you know, once you get a strategy that you're comfortable with, then go ahead and do it. And just from a psychological standpoint, like, it's easier to trade other people's money. I don't know, right? That's just me personally, right? Like, I feel like it's easier to trade. It's just a little bit less stress when you're trading other people's money as opposed to your money that you need back right away, right? Because what most traders do is they'll take their last dollar, put it into a trading account, and now they're trading with so much stress over their head. Right now they're trading with the need to have to make money. Whenever you trade with the need to have to make money right away, it never works out in that favor. Like, I promise you, it's never going to work out. There's too much emotional stress that's involved with that. All right, so if you take this funded account route and you put that small deposit or that $100 account and you're trading other people's money and you're not using your bill money, typically it just removes a little bit of the stress. Because whenever you're trading with money that you need back right away, you're usually not going to get it. And that's just me being honest, right? You're usually not going to get it. All right, let's take a quick look at GBP CAD, guys, and then we're going to go ahead and wrap this session up. Another phenomenal session as usual. All right, we will be back again tomorrow. Again, go ahead and like this video if you haven't done it just yet. Definitely appreciate all y'all that have been rocking with me for this entire session, though. All right, so let's see what we got here for GBP CAD. See what we're looking at. All right, so overall flow for GCAD is just, I mean, this thing just has been on a tear to the downside, has just been absolutely tanking. I personally am not going to be looking for no buys to go against that unless there's a specific reason for it. Let's see where we're at in terms of the bigger time frame. I had to go to the weekly. I mean, we are at a major level of demand. Like, we are at a major area of support, demand, whatever you want to call it. All right, so it is a possibility for price to break these levels. But I don't know. I personally don't think I will be interested in trading GBP CAD, right? Because price can do either or. We could see price really go ahead and spike up to the higher, give us a little retracement, a little pullback, or price can go ahead and just spike down below this as well and possibly continue, right? Or there's a third scenario, or price can spike down below this level just to go ahead and capture liquidity and then spike right back in it. Right, in my opinion, there's just too many different scenarios that could occur here for me, and I just wouldn't be interested in this. All right, we are at a major level of support, though, a major level of demand. But for me, I just don't see anything. I don't see a bullish reaction just yet, right? That will cause me to want to jump in. I just see this market still flowing lower. All right, so I don't know. For me personally, I wouldn't take this one. I'm personally sitting out unless you see something else that I don't see, which could be possible, right? Go ahead, trade what you see, all right? But for me, I'm not interested in something like this. But family, I appreciate y'all. I love you guys. Thank you guys for rocking with me today. Another phenomenal session. Like I said, I am going to be doing this consistently Tuesdays, Wednesdays, and Thursdays with y'all. Really going ahead and, you know, I want to be one of the best on YouTube by far, right? I know there's a lot of phenomenal traders out there. There's a lot of traders that are actually doing their thing, and it's cool for them. Right, you know, eventually I'll probably be doing collabs with a lot of your favorite YouTube traders. But for now, I'm focused on you guys. I'm focused on helping this community grow, helping my community grow. And I look forward to really just seeing everybody in here get better over time. Right, if you guys are not a part of my Telegram, make sure to be in my Telegram. We're in there dropping value all the time. I drop so much value in my Telegram channels, it's not even funny. Make sure to be subscribed to this channel as well if you have not subscribed just yet. If you're wondering why you are not able to comment in the chat, it's because you're not subscribed. Right, only my subscribers are actually able to comment in the chat. Okay, so please, if you want to comment, if you want to, you know, interact with us, just go ahead and hit the subscribe button. It's free, but it definitely helps me out tremendously. And yeah, you're able to just go ahead and communicate with us as well. But family, I appreciate y'all. I love you guys. It's your boy Abel, and I'll see you guys in the Telegram where we go ahead and look at more opportunities. All right, family, I appreciate y'all. I love you guys, and I'll see you guys later. Let's get it.